Cool. Sorry about that. Let's see if I can share now. Charts. All right, we're gonna let everybody trickle back in here quickly, and then I will get started. All right, I think everybody made it back. Let's get into it. So I want to preface this before anything else. Even though these lottos, as a lot of you have seen, have the potential to be pretty profitable, and even though I have a relatively decent hit rate with them, I need you all to understand that this is not a strategy unto itself by any means. I would not base your entire, trading schedule or your routine around solely trading with this strategy. When I look to take lottos, I pretty much, if not all of the time, am using profit from previous plays throughout the day. And that way it's either, hey, I'm going to make way more money than I already made, or I'm going to come out, relatively close to break even. I do not leverage a lot of capital that is not profit personally. I think that when you're dealing with situations that are high risk, high reward, the high risk side keeps me from wanting to put a large portion of my actual personal portfolio in. Whereas I have no real issue in, say, putting in a couple $1,000s from profit when I've made, 10, 15, 20, 30, and then seeing if I can take that smaller amount of my profit to a significantly higher value. It doesn't necessarily need to be done with, several $1,000s. This can also easily be done. Like there was a play last week where $100 would have pushed you all the way to a couple thousand or $1,000, $1,200. So one sec. Somebody talking? Oh, it's fucking Siri. That's what it is. Sorry, my phone decided to join in on the conversation there. All right, let's just shut that off. That was weird. Ghosts joining in. Give me 2 seconds. I need to shut my phone off. Okay, so where was I? Don't use your whole portfolio when you are taking these plays. For the love of God, I know everybody always makes the jokes. I'm going to full court these lottos. I would highly recommend not doing that. If you do it at your own risk, but please do not come crying to me after the fact, because I will feel no sympathy for you because I have warned you here. Okay, so when we're looking at these plays and we understand that there is a high risk to reward ratio here, we need to kind of identify a few key factors in how to even figure out what contract we want to take. Number one for me is the actual timing of the situation. We need to take a play late enough in the day that the premium has died down and we can use that to our advantage. So you'll see that I normally will not take a lotto play before 10 PST, so 1 p.m. Eastern time. And this is predominantly because at that point in time throughout the day, out of money premiums are going to decay because of theta, and significantly so because we are taking plays that are 0 DTE. hence why the reward possibility is so high. So number one, what time do we start to look to do this? I come to my chart at 10 and I decide, hey, is this going to be a good day or a bad day to do this? And I tend to execute on these plays between 10:30 and 11. I feel like even though premiums start to get cheaper from that 11 period into close, so that last 2 hours, the risk becomes significantly higher. Like obviously premiums are decaying because these contracts are not in the money. And a lot of the times they're not even close to being in the money. So if I'm going in, you could say, oh yeah, the premium is going to be super cheap because there's, 5 fucking minutes to close. That doesn't really make it a good position. So step number one, wait until the end of the day. You're going to be better off. If you start the day, and I've done this a few times and it's been successful, but I've also done this several times and it has gone absolutely nowhere. Let's say the market opens and you initially are going through the options chain. You're like, hey, I'm just going to buy the first thing that I see that is, 60 cents or under, because that's what Mitchell does when he takes his lottos. Well, I would hate to inform you that probably will not pan out at the beginning of the day. If we're looking at SPX, your contract to be that cheap is probably going to be, I mean, depending on the day, 80 points out of the money. Like at that point, it's impossible to get it. So it's like you're really just giving the market makers your money. Whereas if we start to wait until that 10:30, 11 time period, we can be 20 points out of the money, depending on the day, sometimes 30. And it actually does have a possibility of going in the money or at least relatively close. And that's what we need to look for. So timing is very key when you're starting to look for these plays. Now, there are two things that I look for before actually entering a play, and we can kind of see it. Where are we? On the 23rd, which would have been this day. So I zoom through all the time frames, but for plays like this, I'm normally looking to enter based off of the 15-minute chart. As I was telling people earlier today, the chart that you're using to determine whether or not it is a good time to enter usually reflects how long you actually plan on holding the position, because we're taking these plays for a very short amount of time a lot of the time, and we're trying to just catch one pop, maybe two pops, and that little bit of IV spike. I find that the 15-minute is good. A lot of people that have been around the server for a while know that we've taken some of these lotto plays and within 5 minutes, they could be up 500%. I know I had one day where it was like 1,000% in maybe 2 minutes. So 15 is pretty much my bread and butter, even for day trades, but for lotto specifically. And there is something that I'm really looking for. So if we can see, this is the 23rd. So this is the day that we had that 400% play and that 1,200% lotto. And right around 10:15, which you can see at the bottom of the screen, we were approaching, I'm not sure where we were exactly at that point in time, approaching the existing low of day, right, which was the open, and potentially wicking through it around that time. So after we know what time we are looking to take the plays, the rule of thumb that I have is if we are not at the top, if we're not at the high of day and we're not at the low of day, we don't take a lotto, right? This is really, really important for me. And I find a lot of success comes with this ideology. You could have seen it today where we just kind of range in the middle of price action. When you're ranging in price action, you're not at a breakout or breakdown level. We tend to not get the pop that we need to start to capitalize on this price action. So when we are at the top or the bottom of our price action for the day, and this doesn't need to be just for SPX or SPY, the same line of reasoning goes for any ticker that you're looking at. So we look and we're identifying where we're at in terms of the price action. So on the 23rd, we happen to be at the bottom of price action at the time that I started to look, right? So 10:15, 10-ish, we're looking around here, boom. Sorry, I'm working off a laptop here, so it's going to be a little iffy. Okay, so what happens after we've identified the timing is right, the actual price action is potentially right? So then the next step would be to look back and determine whether or not we want to try and take this for a bounce or whether we want to take this for a continuation. Now, for me, we had strong selling pressure the entire day. There was very little in terms of retracement or bounce. as certain members kept trying to tell me the entire way down that we were going to bounce, and we never did. And we finally come back down. So I was leading puts into the rest of the day. I know that we had let's try and zoom this out a bit. Sorry, I'm trying to figure out how to do this from a laptop. We're over here. So we had a gap fill to the downside, which was my actual target for the entire day after we started to go down. So, timing's right. We're already at the bottom price action for the day. I'm predicting downside continuation to at least hit this gap fill, right? So we've determined the timing. We've determined that it's even feasible to look at taking a lotto. We've determined the direction. And I mean, there's so many factors. This is just general price action analysis to determine which direction it's going to go. Had this candle shown a ton of buyer momentum, right? So a long wick up, I probably would have taken it to the upside and targeted the high of day. But the next thing that comes is like, well, where do we actually want to aim for our price target? So if we're at the high or we're at the low, it doesn't really matter to me. I tend to target the opposite side on reversals. I don't really play, and as I'm sure a lot of you noticed, I don't really play continuation plays with lottos. I don't think that the momentum is there. I just had a strong feeling after the massive sell-off on the 22nd, we were going to dump quite a bit on the 23rd. I just didn't think we were going to absolutely die the way we did. But a good rule of thumb is to target, if we were here and we saw a bounce, I would be targeting the high of day. And let's say that this was our 1030 candle. I would have been targeting the low of day, right? So I do this, and there's somebody had asked me, it's like, well, are you looking at the open interest or the volume of the contract? For me, the answer is no. I rarely look at that, because if I'm just targeting the opposite side, I know that there's going to already be a ton of volume there, right? Because we were already pressing it. So as we approach that, the IV is going to spike pretty rapidly. With the volume already there, people are going to start to try and buy in on the way up or the way down. People are going to try and average into their position to either break even. I just find that I just keep it simple. It's like, what am I looking at? So here, if I was anticipating a bounce, we're at 395. My contract would have been 399, right? I would have been slightly in the money at high of day. On the flip side, if this was the candle at 10:15 or 10:30, and I thought that, hey, we're going to come down, I'd be targeting the low of day, which in this case, because this wouldn't have existed yet, would have been the opening print. So I would have targeted 395, right? Which would have been at the money if we got down there. So that's really the general rule of thumb for selecting the contract. If you go back in time and do the analysis on the previous plays we have, that's normally what I'm doing. And sometimes it gets a bit ridiculous. I know that on certain SPY plays, we're like 6 points out of the money. People are like, that's a ridiculous play. But you have to think about the high of the day and the low of the day. They're kind of like giant magnets a lot of the time. And the fact that we're taking this with about 2.5 to 3 hours left in the market means that there's enough time to practically attack these. That being said, if we were way down here, at 10:30, I would not be targeting 10 points up. I think that that's a little unrealistic. You have to think to yourself, what is actually possible? Even on like the far bounds of reality, you can kind of say, hey, there's like a 5 to 10% chance we can do this. All right. But I wouldn't be targeting, 402, 406 from this bounce point, right? That's just impractical. So we need to pick a contract that we can actually feasibly attain. And I find that the easiest way to do that is just be like, oh, fuck, there's the high. Oh, there's the low. It takes a lot of guesswork out of it for me. So I can just roll up and be like, oh, we're at low a day right now. High a day is 4 points up. We have about 2.5 hours to get there. Are we showing buying pressure? If yes, then just buy the contract. And at 10:30, if you're playing SPY and you're at least 4 points out of the money, you're going to be at about 15 to 20 cents. On SPX, you could be anywhere from 0.3 to 0.6. I find that to be my sweet spot. And the beauty of it is a lot of people want to size in with the same regular sizing that they would. So let's just say I have a $10,000 portfolio. I'm putting 10% into each play, put $1,000 into everything that I take on a general basis. I would never recommend, even though it looks smart I guess. You see all the returns and you're like, oh, cool. If I put 1,000 in, it's going to be 10,000. I would not recommend sizing in the exact same when you're looking at lottos as you would for a regular position. So you have 2.5 hours left. And if you just range, go sideways the whole time, that's going to die, right? If you go down and you're in calls, it's also going to die. Obviously, the inverse is true. If it goes up in your inputs, you're going to be screwed. So you have to think, it's like, hey, I'm taking a contract, it's $60. That $60 can be $300, could be $500. If it was like the 23rd, it could be what, 12? No, 720. It really does have potential for a little bit of money to turn into a lot of money. Now, the issue with this is that a lot of the times the contract value is not linear. It does, even though we're going down, any bump that we get is going to dramatically take the contract value down. Anybody that's sat in these lotto plays before can tell you this firsthand. You could be up 200%, like it'll go, you drop 2 points, it goes up 30 cents, you're, up 10%. Then drops again, you're up 300%. It goes back up a little bit, you're up 40%, right? So there's a trade-off because seeing these large fluctuations in dollar figure gets to be stressful for people. So if you're in with $1,000, you're in with 10% of your portfolio, or God forbid, you're in with, 40% of your portfolio. I've seen people blow their accounts because they take the plays and then they get mad at me. They're like, the one time I take it is the one time it doesn't go. And I'm like, well, if you listen to the sizing rules that I was telling you, you should have like 20 more attempts at this, right? It's always a numbers game. But being able to hold it, the other thing that you get is, hey, I didn't hold the move the entire way down. Excuse me for all these fucking lines on my chart now. This looks ugly. But I didn't hold the whole way down. And and I hate to tell you this over and over and over again, it becomes a lot easier to hold a play the entire way down if you are less attached to the dollar figure in your position size, right? So if you're in for a fraction of your account, you're not going to really care if it bounces or fluctuates. You've already kind of parted ways with the money and you're like, well, it is what it is. And then you set this mental target in your mind. You're like, okay, I'm going to try and get 500% on this. If it doesn't go, I'm down $60. It's really easy to swallow that versus you needing to micromanage your chart the entire time when you're oversized into a position that goes to zero guaranteed in 2 hours, right? So sizing on this is good. If you have $100,000 in your portfolio and you want to put $1,000 in, be my fucking guest. But you can't expect to hold for an entire move. And these are the most volatile things. People have seen these like fly like crazy or die instantly. Because like there was the play from the 23rd, we came down, we were up 1,200%. Next 2 candles, right? Zero. Totally gone, right? And it doesn't take a lot of time. It took almost an hour and a half to hit bottom. And then that was immediately eliminated in 30 minutes. So make sure that when you're taking plays like this, the sizing is advantageous to your account. Right? That's really like the main thing. If you're going to break this down into 3 points, it'd be like, make sure that you're taking these plays late enough in the day that premium prices died down. And what now looks like a lotto is within the realm of possibility to even hit, or at least get close. So then number 2 would be, well, what direction do I think it's going to go in? And I've been wrong on that before too. It's like you really need to be spot on. But the good news is you usually have a 50-50 shot of guessing the direction right. So that kind of helps. And then third is make sure that you're sizing relative to your portfolio, that you're going to be thrilled if it goes 500 to 1,000%, but you're not going to cry yourself to sleep if it goes to zero. What if you just bought both directions? Okay, so if you were to straddle on a lotto, it could go. I don't recommend that because it's just like buying, I guess, you start to lose the value of this if you're double paying and it goes flat, right? And I've had days where you don't hit either side. Or you're still going to be like, if it only goes 50%, 100%, like you can't assume that every time you're going to take one of these plays, it's going to go 1,000%. I've had whole weeks, like a couple weeks in a row where I was only getting like 50%, maybe 100%, and you need 100% on that to even break even. How often are my lottos hitting? Definitely more than 50%. I think in January, February, I was at like, I know at end of January, I was at like 96% hit rate on them. February took it down a little bit, I think mid 80s. I haven't looked at the overall, but definitely more than 50%. Like we had a couple back-to-back weeks. Would you say plays hit 15%? Like, or do you mean do the plays go plus 10% at least? Yeah. Okay, so here's the other great thing about taking contracts that are so low in price. Any move at all is going to move at like 25%, right? So these usually will fluctuate. I've bought it sometimes and it's filled me lower than the actual than the ask. Sorry, filled me lower than the bid somehow, and I'm immediately up 10%. So like these fluctuations, yeah, I'd say that 10% is nothing. 10% could be a 1 cent move sometimes. I aim before I even tell anybody to take profit, I'm usually gunning for at least 50%. I would say a lot of the plays will go 20% plus very quickly. But I'm not telling people to cut because the whole purpose is to, the risk reward here. It's like I'm not really feeling comfortable taking these all the time if I'm not hitting 300 to 400%, at least some of the times. At 100%, I usually will tell people if it's moving kind of slow, cut half your position at 100%. Then everything else that you have is totally free, right? If you cut 50% of your position at 100%, that means the remaining contracts are already paid for, zero risk. Then you can hold forever. Doesn't matter anymore. So I like to get there. But yeah, hitting 15 to 20%, it's quick. It's not like when you're taking like these move so fast when you're doing it. Like I know that there are some people that I've talked to, they set a limit fill at 100% and they just stop looking at it, right? Because sometimes you'll look away and you'll look back and it'll be 400%. Like if you go through my channel, there were a couple of plays in the last few weeks where I can't even type it fast enough because the percent is moving. Like I remember, what was it, last week or the week before, I just had to type plus a lot because it was like 5, 6, 7, 8, and it just kept going in my fingers. I'm a pretty quick typer, but I couldn't even keep up with it. So that's what you're looking for. And these are hitting, yeah, so far this year. Like I can get you the actual number if I have somebody look. I would say it's probably low 80s. Yeah, all the lottos are under my channel. I've done a lot better at letting people know when I'm taking a lotto and when it's just a regular play. But if something's like, you got to be real with yourself. If I'm taking a 0 DTE play and it's 30 cents and there's an hour and a half left, you pretty safe to assume that it's a lotto. Even if I'm not saying it, you should be like, hey, there's like an hour and a half for this to actually do something and gain some value. Seems pretty fucking risky. Maybe I should size down. So I haven't played QQQ, but I would assume that the contracts move similar to SPY, and it's doable for sure. It's not going to be as rapid because your delta is based on a 1 point move on SPY. Whereas if I buy SPX, I find that they move with a little bit more fluidity. But I mean, it's definitely feasible. And I don't even think you need to be limited to QQQ, SPY, SPX. Like I've taken lottos. Some of the craziest ones I've had were on Moderna, Tesla, end of day lottos. It's all going to move the same. The point is that you're still treating any other ticker with kind of the same breakdown that we were looking at here. Make sure it's late enough in the day. Identify at that 10 to 10:30 mark, maybe 11, identify, are we seeing support, resistance? Are we at the top? Are we at the bottom? And if you can't answer all of those, you don't try for it, right? Some days I'll roll up at 11 and I'll look at the chart and I'll be like, yeah, okay. And you'll just recognize it. You'll see it. If you need to fish with yourself, if you're playing around with the chart for like 20 minutes, kind of like, well, maybe this, maybe that, like, don't take it. You're not confident. When you see a good play, when you see something that looks like a reversal, when you see something double topping, when you see something bottoming out, like you will get to the point where you're just like that, done. You're not like, well, maybe this, maybe that. You're like, no, you look back the previous day, you're like, yeah, we're at this support level. And then you flip the opposite way. Tesla's good. I think that there are some slower moving tickers. I've never really tried this on Apple. Things that don't have explosive moves. So like Amazon would be decent, Tesla would be good. I know fuck, maybe Apple would be fine because it's end of the day, it's still moving the same. It's the homework that requires the hard work. I mean, I think that that quote is good. I think that trading is certainly a you play like you practice situation. I would highly recommend to people. I'm not sure how many newer people are in here, but man, there are days like there were weeks on end where I was just looking at the charts and sitting here all day, not trading, right? Just watching. So I think that the amount of time invested not trading is very heavily reflected when you do start to trade. Just the identification of how price moves on certain tickers, that is the homework, and that takes a lot of time. Like I've spent hundreds and hundreds of hours just staring at charts and not doing anything on them. But now I'm at a point where I can get out of bed if I wake up late, look at the chart and be like, oh fuck, that's a whatever. Oh, look, I see resistance here. Oh, I go to the 1 hour. Biggest thing to keep my hands in my pockets. Pull up an account with no money in it. Make it so you can't trade. Makes it real easy. I had a point last year, I think at the start of last year, where I just like for the life of me, I was rushing into everything. I couldn't fucking get my head on straight. And I drained the two accounts I had at the time. I just withdrew everything. And I told myself I wasn't going to trade anymore until I had like 2 weeks of just staring. It's like I don't know if any of you have seen Burnt with Bradley Cooper. It's like he punishes himself by shucking a million oysters. It's kind of like that for me. I just like I didn't want to sit and stare at the charts and not trade, but it was kind of like punishment. It's like, hey, what I'm doing right now isn't working. Um, I know I can do this, but I think I need some time to regroup. So I just stared at the charts. It was fucking boring as hell. It was awful, but I was better for it. That's the homework part, right? Like, I don't think anybody likes to do homework. Everybody wants to be in it. Everybody wants to be in a fucking trade. Don't you can't feel like that. Like you have to detach yourself from the needing to trade for sure. And like if you have a bad week or a bad couple of weeks, people are like, oh, I'm gonna reload. I'm like, don't fucking reload the money. You haven't changed anything. Nothing. You can't lose a bunch of money and then put more money in and be like, that's it. This is the time. We got it now. Like, there's no fucking difference. So like stop beating your head against the wall and be like, well, what do I need to change? I'm rushing into place. All right. So sit there and just watch the chart for a million hours and be like, just try and predict what the next candle is going to look like or predict where you're going to end and do that. It's like you can't just lose constantly and then one day assume for no effort invested on your end that things are going to change. It doesn't make any sense. All right. So back to the lottos after my long-winded rant. Yeah, I can. I have about 10 minutes. Let's see if I can pull something out. I can't actually. I do not have, I don't have Discord on this computer. I can't even see it. One sec. Let's see if I can find something on this computer. Beep, beep. Mm. Okay, so on the 21st, I had 39.80. this. It sounds right, doesn't it? Oh, sorry. 4010. How do this back here? Sorry, I'm like hopping back and forth between computers. Okay, 4010 at 1054. So yeah, we would have been right around here. Okay, so this is a slightly different scenario. We weren't quite at the bottom of the day, so this is where I was looking. I filled at 1054, so I would have filled between these two candles. But you can see that there's previous resistance, like quite a bit of it, right around this area. Right, so he came down, wicked off it, sort of held, bounced off of it, rejected off of it, held below it, held above it, held above it, held above it, held above it. So I had established this area as what my point of resistance was. There wasn't a whole lot holding it up. Sometimes with these lotto trades, like if you don't hit it right, this very easily could have gone the other way. But I saw that we had been holding that level for quite a long period of time. I saw a contract that was advantageous, which 4010 would have been slightly over this. I think if I remember correctly, 398.6 is around 4,000. So I had targeted slightly above that. So slightly above where our high of day was, because that was the closest contract. And then it ended up ripping over it. So all you're doing the same thing. It's like we weren't exactly at the low of day, but I think that we were at the low resistance. You could have said it was a little bit lower, but this level, as you can see on the 15, held almost the entire day. Like except for the first 45 minutes, it pretty much touched constantly. So look, see that we're holding. That's it. Take the play in the opposite direction near the high. So that was pretty much the price target. And then the beauty is, even if you get to the price target, you're going to be way up if it's not the last 2 minutes of the day. But there are times, as you can see, we came back up to the high, rejected, and then we got that pop, right? That pop is really what sends it. If you get up to here, you're up a couple 100%. If you get that pop, that's where you go from like 300% to 1,000% in a matter of minutes. So it's not overly complicated to do. It does take time for you to dial in your own mental thought and kind of identifying these setups quickly, right? But wait for the time period to be right? So you're looking at the last 2.5 hours. Identify if you're at the high or the low. Well, here we were at the low. Identify if there's any sort of support. Well, yes, we had identified the support already. So we start to target the high, target the existing high. And then there's definitely an element of luck that comes into all of this, right? Cool, we hit the high, but how many times have you seen a double top form? Sometimes you get really lucky and the high just gives and you just like rock it. This was, a full extra point on top of it. You're up 200%, you get an extra point, you're up like 500%. Let this play go. Yeah, this is the one I went like 850. I think I hit 850%. I was pissed off that I didn't go 1,000. And then 2 days later, I hit the 1,000%. So I think that there's consistency in this method for me. Again, any sort of strategy that people are utilizing, it's going to be different across the board. Some people might tell you to take it earlier. Some people might tell you to take it later. All I know is if you go back through my channel and we have the actual trade log somewhere else that I could probably pull up if you needed it. This has been consistent for me. Very consistent. Like I like to trade, a little bit in here, get the money, and then try and 10x it up at this point, right? Nobody can come to me and say, hey, you want a 10x pure profit with no risk because if you lose it all, you're just at break even, and tell me that that's like a ridiculous idea, because it sounds pretty good to me. Yeah, so that's the gist of it. For the people that are in here, always you can feel free to reach out to me. I'm pretty good at responding in the chat to almost everything. So if you do have any questions, especially if I'm taking a play like this, we can break it down a little bit more. But I think in theory, I try and make things as simple as possible, right? I don't want to go in there with some crazy difficult to execute strategy. I don't think that that's beneficial for you. And if that was how this worked, I wouldn't tell you. How do I choose the contract? The contract is just slightly out of the previous higher low, right? So I had 4010 which would have been slightly above the high. Yeah, I'm gonna go. I have to get to a dinner, but yeah, feel free to, if you have any other questions in the Academy discussion, there is a separate post for this. Feel free to post there. And I will get back to you as soon as possible. And again, if you have any questions when we're actually taking these plays during the day, if I'm in a play, I'm sitting there for the most part, unless it was last Friday. And I would be happy to answer any questions you have. When will recording be posted? I can't go a fucking day without getting that question. I swear to God. Just one day, Kevin. One day without recording being posted. Drives me nuts. It's always posted. People need to know better. All right, y'all. Love you. I'll catch you tomorrow. Have a wonderful night. Hopefully you learned something. Hopefully this seems like, it seems so stupid easy. You're like, why didn't I think about this? Because it really, like, it kind of feels like that to me sometimes. Sometimes it goes terribly wrong, but I mean, for the most part, works pretty well. So yeah, have a good night, everybody.